What's up, everyone? All right, so in today's episode, we're going to talk about a penny stock that is up over 774% over the last 5 days. Now, this is an impressive move, but typically I wouldn't be that interested in it because for me, I have found that I don't usually make as much money trading these low price stocks. And one of the reasons is because these lower price stocks, when they trade below $1 a share, they trade down to the 1/100th of a penny. So if you looked at the level 2 of some of these stocks, they could trade something like this, 81 cents, but the one that's just down to the penny, down to the 1/100th of a penny could be 0.8115. And then it could be by the spread 0.8116. And so what ends up happening when you have such a tight spread of 1/100th of a penny, typically, if you bought a stock like this, you would say, well, let's just say you wanted to buy 100,000 shares. If you bought 100,000 shares of this stock, typically, if it was above $1, your spread is 1 cent, which means you're risking $1,000 if it goes up or down even just a penny. But right here, down to the 1/100th of a penny, you're risking only, and this is kind of amazing, you're actually only risking, boom, take away those zeros, 1/100th of a penny. So 1/100th here equals not $100 of risk, but just $10 of risk. $10 of risk. So you can get in this with huge size, but not actually be really, in theory, risking that much. Now, this can be a little bit of an illusion because sometimes these can still flush and you can end up losing 5 or 10 cents and then you're suddenly down $5,000 or $10,000. But typically when they trade on really high volume, the spreads stay tight. And on FOXO, this has been trading with over 1 billion shares of volume each day. It's insane how much volume it trades with. So the result is that it's been very crowded and it's like, there's so many buyers and sellers jamming together just to try to capture, a tenth of a penny, maybe a couple tenths of a penny and make a couple $100 on 100,000 shares. Now, the most of the traders that are going to try to do that will be trading with a commission-free broker where you can trade as many shares as you want without incurring any fees and commissions. So this is the chart right here on FOXO. Right now, it is hitting a new high a day. It is currently up 72%. I'm green on it, and I'll walk you through why I decided to break the ice and trade it. So let's start by looking high level at the daily chart, because this is a stock that, again, doesn't really meet the profile of the type of stocks I've been the most excited to trade recently. The price is lower, the float is a little higher, and it's certainly very thickly traded. But this is why I broke the ice on it. So it has no news, which is obviously not preferred, but that is the reality. This is a continuation setup. So I have my scanner over here where I scan specifically for continuation. And this is a continuation setup is when you have a stock that has made a really big move, like over 100%, and is continuing to hold those levels. So when a stock makes a really big move and it's continuing to hold up near the highs, we watch that for pulling away. And the thought here is that anyone who is short is going to start to get squeezed out and forced to cover. And that's when things can get interesting. Now, this stock it's kind of incredible, actually, because on day one, it traded just under 1 billion shares of volume. I'm rounding up a little bit. It was 939 million. The next day, it traded only 31 million. How is that even possible? To trade that much volume and the next day to trade only 3% of the volume on the previous day? Well, unfortunately, what happened in the case of FOXO here on that second day was that it pulled back so dramatically, I think pretty much everyone just thought it was dead. It had this incredible move on day one, all the way up here to a high of $1.05 from a low of about 15 cents a share. It goes all the way up to $1.05, pulls all the way back down to 36 cents. So then this next day here, trade on very light volume. People gave up on it. This was the day that it was in play and we had that high volume. And then it rips up for another move. Okay, so what it does here is it squeezes up for a second attempt. And this is where I started to draw a trend line right here from the top of this candle to the top of this candle. Now, you could have alternatively drawn a trend line right around here, kind of like this, and that would have been fine, just like that. But what you'll notice, oops, let me just draw that. bring that back up to the top of that candle. So I want to put it right at the top. There it goes. Okay. So I think that's the right spot. All right. So this morning, look at this. It comes right up to this ascending resistance line, and then it pulls back and it's right below this an additional resistance line. This is actually a descending resistance line. So you have these two levels that are in play. And when I saw it coming up here, I did not buy it for the break of $1 because I said, you know what? It's got this resistance level right up here. I just don't think it's going to work. I think we've got to be patient. We've got to wait a second on this. And so I said, I'm going to hold tight. I'm going to wait. And I was looking at the previous high here, which was about $1.06. And I just knew that, you know, the way we had pierced that level and then dipped back down, that this was going to be a problem to try to trade it, especially because look at the shape of this candle. It's a topping tail. So what we know about those candles is when you have a stock that's, you know, rallying up, pushing higher here, and then all of a sudden has this candle, what does this communicate? Weakness. This communicates weakness because although it's squeezed up, the sellers pulled it back down. So a shooting star is an indicator of a possible reversal. Now, if that shooting star is red, it's even worse because what it means is that we opened, we squeezed up, and then we actually closed lower, and the reversal has already begun, and it usually continues with a second red candle pullback. So fortunately, in this case on FOXO this morning, the shooting star was a green candle. So not as bad as if it were a red candle, but certainly it was a problem. So I didn't take a trade there. It pulls back, and then at the open, as it squeezes up right here, it pulls away, and I say, you know what? I'm going to break the ice on this. I'm going to take a trade. And I took my first trade right about here at $1.10 for the breakthrough the highs. I was looking for the breakthrough the high of day, and I was hoping this might halt up. Now, it hasn't halted yet today. Despite being volatile, it hasn't halted. It went up to $1.18, which was about 8 cents a share for my entry. I think I got in about $1.09. So it went up about 8 cents, which isn't a huge, an 8-cent winner, not something to really brag about. But in the case of a lower price stock like this, where you can easily buy 50,000 or 100,000 shares, it does add up. So then it pulls back here, it dips down, and then look at that second attempt back through the high, all the way up now to just under $1.30. But there is still a problem with this. Two problems. Number one, trading on super heavy volume. And look, I like high volume, but this is too high. It's so thickly traded, it's a tug of war. It's a battle between the buyers and the sellers. And currently the buyers are winning as it's up 74% on the day, but unfortunately it's not pulling away in the way that I would have liked. Now, second issue is halts. So what do we know about halt levels? We know that stocks that are under 75 cents on the prior day close will halt how often? Every 15 cents. And this isn't every time it goes up 15 cents, but every time it goes up 15 cents in less than 5 minutes from the reference price. So the way the reference price is established on a stock like this is we have, and I'll just grab my green marker here. So the price is moving up. So it moves up a little bit. Let's say it dips down. I'm not going to do full candles. You get the idea. These are supposed to be candles. And it moves up a little bit right here. So the reference price for the halt is the average price over the last 5 candles. So 1, 2, 3, 4, 5, average price equals sum divided by 5. Reference is going to be about here. So now for this stock to get halted, it has to actually go up plus 15 cents from the reference price. So if the reference price is 88 cents here, then it's not going to halt until it hits $1.03, right? It's got to go all the way up to that level to halt. And it needs to do it quickly because if it moves slowly, the reference price keeps updating. How often? Every 30 seconds approximately. So every 30 seconds, the reference price is updating. So in order for a stock to halt up, it needs to really pull away very quickly. And unfortunately, in the case of FOXO, it's now up 84%, which is great. It just hit a high of $1.30, but it's not pulling away fast enough to halt. And we've seen a lot of really big sellers, 150,000 shares, 200,000 shares. I mean, these are huge sell orders that are coming out on the offer. Currently, it has 130 39 million shares of volume, and the volume is cranking. So this is just churning a lot of volume. I think, to be honest, at this point, it's going to be a difficult stock to try to day trade, because now that it's over $1 a share, you're stuck with 1 cent spread, right? You can't trade for the 100th of a penny or even the 10th of a penny. You're doing a full 1 cent spread. So 100,000 shares, all of a sudden it drops 5 cents, you're down $5,000. So now the money's going to add up quickly, for better or for worse, if you're trading with big size. So it's starting, and what ends up happening is, and then this is kind of interesting as well. So when you have, so we'll do a little graph here from 90 cents to $1, and then from $1 to $1.10. So from $1 to $1.10, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 little troughs or increments where orders will get dispersed. So if you have 1 million shares of buying between 90 cents and $1, and 1 million shares of orders between $1 and $1.10, those orders between $1 and $1.10 are going to have to get filtered into these 1 cent increments. So it'll be basically 100,000 shares at every increment. Whereas when you're down at 90 cents to $1, because you have 100 little increments here, right? Because 1/100th of a penny times 10 cents is 1,000. So you actually have 1,000 increments from 90 cents to $1. And so the million shares, it gets dispersed across all these little potential levels. And so it doesn't look, it looks different because of the way the orders get dispersed. And then once you get into these higher price levels, although it can move faster, if you have people who accumulated really large positions here, they're forced to put them in sell orders in these areas. So now you're going to have these really big sell orders on the book. And that's exactly what we're seeing now. So unfortunately, we're at a place where, although, look, I would love to be able to keep day trading it. I think the easiest day trades are probably behind me for the day. And unless I could get comfortable just pressing the buy button, sitting and holding it and not looking, I don't think I'd be able to really do too much more trading on this. Now, I'll also say that this morning started relatively slow. So when I first sat down this morning, I looked at the scans and I saw BTCT was on the scan. It's crypto sympathy. Well, it's a stock or a company that is involved in the cryptocurrency space, BTC Digital. And so it's moving up as Bitcoin is moving up. They even have BTC in their ticker. So, and in the company name. So it is halted up right now at 535, which is nice to see. But here's what I've noticed. Generally, when I try to trade stocks that are sympathy to cryptocurrency, they are a little bit of a derivative, which means their performance becomes tied to the performance of Bitcoin. And unless you're going to keep a chart of Bitcoin up while you're trading them, it can be fairly difficult to find success. So I don't usually like trading these types of derivatives. One of the other problems is that I feel like there are high frequency trading algorithms that are actively calculating the price of Bitcoin as these are trading, and sort of it's just like there's another level of algo involved. It's not exactly the same as trading options, but when you trade options, they don't really vary too much from the value of the underlying asset, in the sense that options don't usually go up a ton when the underlying asset isn't moving. They move to a certain extent in tandem. And that happens with a lot of these stocks that are tied in with cryptocurrency. So for that reason, I found it difficult to trade. And I kind of knew that. And so you know what I did? I stuck with my guns. I said, I'm not going to take a single trade on BTCT. And unfortunately, this morning, I wasn't able to build a cushion on any trades early in the morning. We had BTCT that squeezed up around 7 a.m. And look, it was a nice move, but nothing like unbelievable. It squeezed up, but nothing crazy. Goes up to 5, pulls back, pops up to 5 again, pulls back. Now here it's popping up, but notice the divergence of heavy volume selling, light volume buying. This might be a trap, and I don't know if it is, but it might be a trap. So I didn't take this trade. The first stock I traded actually was Saidu. Saidu comes out 8:30, bottom of the hour, breaking news. I jumped in this, but I was cautious to jump in, and I'll tell you why. Yesterday's trade on RSLS popped up, and then reversed. So that was not a great trade. I made money on it, but it was a little bit of a close call. And today, this morning, we saw AGFY pop up and reverse. Now, AGFY is in the cannabis business, which has been, cannabis stocks across the board have been down since Trump won the election. So I didn't really think I wasn't sure this was going to work, but anyways, it popped up and rejected. And I saw some traders take some losses on this, and they were like, oh man, now I'm in the red. How am I going to recover? And there wasn't a lot to recover on. So SIDU pops up, and I said, you know what? I'm going to let it pop up, and I'm going to see if it can hold this level. So as it first pops up right here, it goes up to a high of $1.88 right here. It pulls back, and as it pulls back, I said, all right, we've got our first pullback right here. And so I got in as it curled back up here. And it goes from $1.88 up to $1.95, up to $3, up to $3.15. Boom. I took that trade with 10,000 shares. I got in, I got out, I locked up $1,600 of profit. It then pulls back, and I bought this dip down here, and it pops back up to 3. I took that profit off the table, and that was it. Those are the only trades I took on SIDU. So I got 2 trades on SIDU. I didn't overstay my welcome. Both are green. I'm up $2,243.51 on it. By the way, there's my P&L for the day. Then I took a trade on LEDS. LEDS, I took this trade. It didn't have news, but it was a continuation setup. And what's interesting about this is that all of a sudden it starts to pull away. So I got in for the break of 2. It goes up to 215, and then suddenly it slams down. A big sell order goes through, and the limit was $1.83. So what happened was someone sold probably 40,000 shares with a limit order of $1.83. So what happened is it swept the price all the way down to $1.83, and then the remaining 20,000 shares was on the ask at $1.83. So what I ended up doing was averaging down on that trade at $1.83. It popped back up to 2, and I got out still for a loss of $572. Not a great trade. I don't like averaging down, but in this case, there wasn't a catalyst that resulted in the 30-cent drop. So I thought it was sort of likely someone who was holding probably from yesterday, unloading their position. And unless they had more shares to sell, it would probably pop back up once they had sold. And that is what happened. So educated intuition there, paying off, got in on the low there, added on the low. It popped back up, got out with a little profit, and then, or offset the loss. So made money on the average down, lost money on the first trade, created a loss of 572, but I was down probably 1,600 at the lows. And then at the open, I was a little hesitant, being up only about 1,600 on the day, but broke the ice on FOXO and got a couple trades on that. And you know, for me, I said, look, today's clearly not a hot day. I'm not doubling, tripling, quadrupling my goal. I'm not even hitting my goal, which is $5,000, but a small green day is all right. And look, if it's going to be a cold market, I don't want to push it too hard. I want to be mindful to step back and to wait. And what I really want to see is something curl. So, you've got BTCT curling today. Could this go higher? It could. BTCT currently showing a resumption price of 587, which is pretty nice. Look, that's a nice gap up if it actually opens at that level. That's nearly a 50-cent gap. So can't really complain about that too much. By the way, I can see resumption prices here on Lightspeed, the software that I use. A lot of commission-free brokers won't show you resumption prices, and they won't show you halt prices. So SIDU currently showing halt down at 188, halt up at 282. So we do show halt resumption levels, and we do show the halt levels and the resumption prices in our trading simulator. So I saw someone post in the comments, they said, Ross, I was a member for a while and I used to use a trading simulator. I wish you guys would offer just the simulator. And I said, we do. You go to warriortrading.com/paper trading under tools, under real-time simulator here, and you can sign up for the simulator. It's $100 a month. So essentially, this covers your market data. This is not something that we make a ton of money on. The simulators, it's actually kind of a pain because it's a lot of customer support, a lot of tech support, stuff like that. But we do offer it because it's an important tool and we know you guys value it. So it is included for free for a lot of our Warrior Pro members while they're doing while they're, have their active membership. But for those of you guys that perhaps just want a simulator, you could do this. Now, I know some of you say you could use the Thinkorswim simulator for free. You could, but it doesn't work pre-market. Well, you could use this other simulator for free. Maybe you could, but does it show you halt resumption prices and halt levels? And it probably doesn't. So if you want that data, you got to pay for the data. We have to pay for it. That's how we get it. So, if you want it, that's how it is. And the broker that I use, Lightspeed Trading, you can't set up a simulator here unless you have a funded account. And I think they only let you use it for I don't know, it's a short period of time. Maybe it's 2 weeks or something. So anyways, now let's watch this BTCT resumption just out of curiosity. So we halted at 58. So resumption there, right there. Look at that, all the way up to 709. So you know what that tells me? That tells me that some shorts got trapped on that, because let's be real, that doesn't really make sense. It doesn't make sense, but if some shorts got trapped, then all of a sudden they're forced to cover. So that's a very strong halt up. And now, holy smokes, showing a $25 resumption, a $10, $13, $10, $9.79. So resumption's coming back down. It's still looking pretty nice, $10.10. So of course, now I have a little FOMO that I didn't, trade it. I stuck with my guns, which was the right move, until all of a sudden you get punished for having that discipline and you watch something squeeze up, 180% without you. But that's trading. And here's the thing. The worst thing that I could do right now is break the ice with my first entry up here, buy right here, and it instantly slams into a halt down. And I'm only up 2,300, 2,500 on the day. So I do a little dip on that. Even with 2,500 shares, it instantly halts down, and then it resumes at 550, and I lose, $5,000, and I go red on the day at 10:30 in the morning. And now I'm running out of time to recover the loss. And I feel that's where you feel really stupid. So one thing I'll tell you about a day like this is that while I cannot walk away with profit on BTCT, I can walk away with discipline. And that's something that I can be proud of, because, people, I just sort of have this feeling like people don't respect you if you can't be a disciplined person. And so as disappointing as it is to miss a move, it's much more important to be able to maintain discipline. Because if I break my discipline and I say, oh, screw it, I'll just trade this, it's moving, well, if I make money on it, then you look like a hero, because you're like, oh, but some people will say, look, you kind of broke your rules and you made money. That's not really the best thing to do, right? So you feel good though, because you made money. But if you trade it and you lose, you have this double loss, because it's not only did you lose money on the trade, but you no longer have your self-respect of maintaining discipline. And that can be very disappointing. So I think that, what you can take from something like this is, all right, we just had this is now up 180%, and we got a really powerful red to green move, and look at all the heavy selling, and then suddenly on light volume, it goes into a double halt up. So that definitely, I think there are probably some shorts that went heavy on this, because the price of Bitcoin has been coming down a little bit. I'll have to look at what it is right now. But I mean, it's not down a lot, but it peaked and then it came back down. So BTC price. So, we're down like 1.7% today. So it's down a little bit. And I mean, look, this right now is kind of diverging. It's not like Bitcoin is currently making a new high right this moment. This is sort of doing its own thing. So what happened? Probably some shorts got heavy on this, thinking, well, BTC is coming down, and does this even have news? No. And then, for all we know, it could be, one big trader, as this broke through VWAP, said, you know what, I got to get out, and covered, a 200,000 share order, and it goes right into a halt. And a couple more people stop out, and it's halted up. It can just be like the straw that breaks the camel's back, and suddenly it's halted up. And now, all of a sudden, there's fear for shorts, and the sentiment changes. Now, the volume here is also actually kind of interesting, because you've got higher, which time frame was that? Oh, that was the 10 second. Okay, so let me look at the 1 minute here. So on the 1 minute, see, this is kind of interesting. So this is pretty high volume into that halt up. That was the highest volume of the day. The 5 minute candle had higher volume, but this didn't trade as long on the 5 minute chart. That's kind of the problem, because these were full 5-minute candles, whereas these candles trading stopped because it was paused for the halt. So right now you're showing a resumption of, well, if you were on a commission-free broker, you have no idea. You don't even know where to put your orders. That's why it's so important to see the resumption price. 860. We're showing an 860 resumption right now. 709 halt, now 850. Resumption price is coming down a little bit. Likely there's some traders who are like, okay, it just halted twice in a row going up. If I'm still short, I'm gonna add to the position. So let's see what the cost of shares is. Searching. So it's not expensive to borrow, which also probably fuels a little bit of a short squeeze because shorts didn't have to pay much money to borrow. So it's 2 cents a share to borrow. So 10,000 shares will cost $200. All right, so borrow 10,000 shares, and then what some people would do is while this is halted, they would start putting out their sell orders. They'd say, whether you're long or short, doesn't matter. But you would say, all right, I want to, I don't know, maybe someone would say, I'm going to buy this at 850. I'll put a limit order to buy it at 850 because I need to get out, I'm short, and I need to cover this thing right away. Or someone else will say, I'm going to put a sell order at 850 because maybe that's, they look at daily resistance or something, right? So now what's happening while it's halted is there's kind of a live auction where people are placing orders and the market is paused, so nobody can execute those orders, but those orders are all going into a queue. And now the market is showing you what the current imbalance is. Now, it could be resuming flat. It halted at 709. It could resume at 709, but it's not. There are more people that are trying to buy this, even at these higher prices, even after the second halt, than are trying to sell it. So the imbalance is to the buy side, and it's up nearly over $1 a share. So we halted at 10. The last print was at 10:08 and 17 seconds. So if this was going to be a 5-minute halt, it would have already resumed. So it didn't resume at 5 minutes, which means it's a 10-minute long halt. Sometimes what we see are shorts put out big buy orders to create a huge resumption to try to create a longer halt to slow down momentum and to give them time to borrow more shares and to reposition. So and then once it becomes a 10-minute long halt, they'll pull those orders and the price starts to come back down. So now we're seeing it's at 808, right? So the price is kind of working its way back down. 806, 802, $8. And as you see it coming back down, there's a little bit of a shift in sentiment, right? You might be thinking, oh, shoot, I wanted to short this off of 850. Now I don't know if it's going to go to 850. I'll cancel that sell order. I'll put my new one at 825. And someone else who's maybe trying to sell for profit is thinking, oh, I was going to sell it 820, but now maybe I'll sell it, 8. Maybe I should put my order at 790 just to be safe. And so in real time, people are canceling orders, they're moving their orders, and they're adjusting to what the market is telling them. But this shows you how if you're trading with a commission-free broker and you don't have this data, you're trading with your eyes closed. In a sense, at least when it comes to stocks that are halted, this data is giving me information and it's helping me decide where to place my orders, where it's going to open, analyze. Like now I know to look around $8 on the daily chart. So what do we have around $8? All right, so we look to the left, we look up, and looks like we've got pretty much a clear window here up to a high of 993 because that was formed by this big red candle. Now, this level here was at 6. It clearly broke through that level. This is a stock that historically I haven't really liked because it tends to have these kind of red days. But nonetheless, it's got room right now all the way up to 993. There is no resistance on the daily until that level because we're above the 200. Other levels to watch. Let me go back to full screen here. So we've got about 90 seconds to resumption. So we'll pull it back up for resumption. You could have ascending resistance right here, potentially. But it looks like we're going to be sort of just above that. What's the resumption price right now? 780. See, it's working its way back down. Now, if it had been 780, it wouldn't have been a 10-minute long halt. It was halted longer, and because at that time it was showing an 850 resumption, now the resumption is working its way down. So it wouldn't be impossible for this to open and instantly halt back down. I mean, that could happen. Now we're showing 760. The resumption is clearly coming down, 755. So it's funny because it's in a sense, it's trading right now. The price is moving, but oh my gosh, now 717, 715. Uh-oh. See, now I don't like the look of that, not one bit. That is a major shift in sentiment. From 860, initially 13, then 10, then 11, then 9, then 8, now 818. So what's going to happen on this resumption? What do you think is going to happen? Well, my guess, and again, this educated intuition, but my guess is if because of the weakness of coming from so high all the way back down, that you're going to have people that just bail on resumption. Because there are some people that may have added as high as 709. So if they're in this at 709, they were feeling pretty euphoric for a minute there. They're like, oh my gosh, 860 resumption. This is amazing. $1 a share, instant winner. And now they're like, oh my God, what have I done? Uh-oh. Gap down resumption. Now it's showing a lower resumption, 690, 687, 684. Panic. It's going to drop. That's what I'm expecting. It's going to drop. 675. We've got now seconds to resumption. 659, 655. It's still halted. There it goes. Now, technically, so that was interesting. So technically right there, when it popped over 7, that was a dip and rip. That surprises me though. It surprises me because usually you don't see a lower resumption and then a squeeze up after the second halt. And that barely halted up. It barely halted up because it thinned out right before the halt. So now we're back to showing 8. So that was a little bit of a bail. That was like a get out of jail free card, because this thing, when they open lower like that, typically panic selling, they flush, they drop, and they halt down. So that's unusual. It's good to see for momentum traders, but unusual. And it's probably frightening for shorts, because what I would expect shorts did was put out sell orders up against this level, because if this had halted down, then it gaps lower. And unless it comes back to the high, you're in the driver's seat on that short. And now you're just going to let it unwind, right? So now all of a sudden it's halted up a second time. But how confident do you feel about being long into this halt after what it just did, right? That affects sentiment, because you see it halt up and then it opens lower and almost looks like it's going to halt down on that panic and then squeezes back up. So now it halted up at 780. It's showing 808. So right now it would only be a 5-minute long halt because it's not a very big gap, right? So now 816, 810, we'll see where it resumes. But currently the resumption time, if it was a 1018 halt, resumption should be 1023. So 1023 and 38 seconds, exactly 5 minutes. So now we wait 5 minutes and we see, what does this do? Does it dip and do that again? It's a third halt up. My rule of thumb generally is I like to be in for the first halt, and I don't mind doing a dip and a rip into the second halt, so long as the stock meets my profile of being A quality. And this one unfortunately does not, partly because of the sector. Well, most really entirely because of the sector. The price is fine, the float is fine, everything else is fine about it. It's the sector that's the problem. It's a Bitcoin sympathy stock, which again, look, it's great to see the movement and the momentum, but I just know that typically I don't make money on these, and I've got to stick with my rules. So first halt, I usually like it. Second halt, usually like it. And then trading after the first halt and then doing the dip and rip going into a second halt. After the second halt, I usually only take this trade if I have a profit cushion from the first two and I'm feeling really confident. Sorry guys, I was on the wrong view there for like several minutes. Anyway, so we got the resumption here. Was watching first 1 minute candle to make a new high. And yeah, it's pulled back. So the halt resumption ended up dropping down. Now it's curling back up. Shorts are probably defending the high of day. Longs are watching off this double bottom, which was around 670, but you're sort of in range here. MACD is still open, but realistically, from a technical perspective, there's stuff to work with, but it's hard for me to get past the fact, of course, that it's not something I should trade because of the sector and at this point in the day. But if we continue to see this type of action in, crypto stocks, Bitcoin stocks, then I'm happy to consider, revising my opinion on these. but I have to be thoughtful about that and not do it, just in one day because I'm feeling FOMO, but do it because there's really a good logical reason. So anyways, that's it for me. Thanks as always for tuning in, you guys. And I'll see you back here first thing tomorrow morning for my live broadcast, which starts around 7 a.m. for all of our members at Warrior Trading. If you haven't already checked out a 2-week trial, check out that 2-week trial. Black Friday sales are coming up real quick. They are our biggest sales of the year. So I want you to make sure you know what this community is all about before those sales come so you can take advantage of them. And those of you guys that want to watch a free day trading course that I teach where I cover my strategy and walk you through how it's evolved over the years, I'll put a link for that in the comments as well. All right, so thanks as always for tuning in. And a reminder, trading is risky. My results aren't typical, so manage your risk, take it slow. And I'll see you guys back here first thing tomorrow morning.